Hello, everybody. Brian here from quantlabsnet.com. Want to show you our latest set of files here. I've got a new one for you. Um, and basically, it's a future options, same as before. This time we have a mix of instruments, and this is fairly current to where if we had $100,000, how do we allocate our future contracts? We'd have 35% going into Bitcoin reference rate. I found out what that stands for. CC 25, ES 20, GC 10, and so on. Here it suggests what um, specific custom strategies should be deployed for each one for maximum profit. That's what I put into my AI prompt. This is what I got back. I also have a fully detailed one right here on the instructions of how to build this out. And more importantly, this is a summary of what was generated um, for the set of reports I put in, the 45, 46, whatever, $400,000. And then it comes back with a bunch of types of strategy it would look at for a short-term highest profit. So volatility, arbitrage, predicted, ARIMA. It would break down each and every type of strategy, what to expect the profit would be, believe it or not. And again, these are for demonstration only. This is not investment advice, but what AI would suggest for market conditions based upon the types of futures and option using hedging, arbitrage opportunities right as of yesterday. And this is what it came up with let's say Bitcoin potential profit of $9,000 over 30 days, has a 20-day volatility. This is accurate at 51%, which is very high for an annual rate. Short-term potential high due to volatility and arbitrage opportunity. Price movements of several $1,000s are possible within a given the given historical data. So that's a problem of backtesting because everyone seems to think that if you backtest it against X time frame that today and moving forward that you will expect that profit. That is not the case, and that's why it's getting to a point now with AI. There is no point in backtesting, okay? Because when you're dealing with something so extreme in volatility like Bitcoin, I don't see the point in backtesting. It's hard to predict it and even forecast it from something that's not predictable. Whereas if you have something like ES, it's still not so bad. That has a 19.9 or 20% annual volatility, and that's still fairly volatile. But the expected profit of I can't remember the allocation, but it's expecting to make $5,700 selling a bunch of futures and sitting in cash. Short-term profit, moderate to high due to steady trend and arbitrage potential. Now, people are going to ask about gold as of today. Let's see what it says. So for gold, it has an 18% volatility rate. Okay. Arbitrage opportunity does exist, but the profitable potential profit is $86 per unit. Buy cash at 3,600, sell futures at 3,300. Moderate to high due to volatility and arbitrage opportunity. So, which one has the highest profit potential? It goes with Bitcoin. Okay, with the current market conditions. Here you have heating oil as well. Profit potential at $586 per unit. Annual volatility at 51%. Oh, sorry, that's cocoa. So you got to ask yourself: less volatility, less likelihood of profit. Okay, so you can measure out how much you can allocate, what your expected profit will be based upon volatility, and at the same time, be able to figure out short-term potentially of a moderate due to consistent upward trend and arbitrage potential. Other opportunities as well. And I fed it over 46 instruments. So here, these are the top ones: BR, CC, ES, GC, and aluminum. Okay. Instruments with lower volatility like Canadian, Australian dollar, and then you get negative as well of Australian dollar. So you can tell which ones to avoid, and that's what the AI will pick out. So here's the detailed strategy for Bitcoin. Here's the strategy for Cocoa. Here's the strategy for ES, the S&P 500 E-mini, and so on. Here's the strategy for gold, which again, more people will be interested in. Buy cash at 32.65, sell futures at 33.52, guaranteed arbitrage profit of $87. So that's pretty good considering using AI. Again, we can't sit here and say it's predictable and it's going to happen, but based upon market conditions and what I presented with it, that's the odds. Optimal profit, arbitrage profit, $87. Put premium at 149.17. Loss of 62. Put expires are worthless. So remember that we are dealing with simulated option data. I have now built out a script that will work with real world option data. That's important to know. It's very limited. I fed it 46 instruments, 15 came back, which is about 30% came back with option chain data. And every time I run it, it's the same set of data. And there's a lot of other option chain data that's not getting brought back. So I'm working on it. I've sent off 3 emails on it for alternative data. Not gotten an answer. Not gotten an answer back from Interactive Brokers to see what I can do about that. Most likely, I may go with Interactive Brokers because we're only watching 46 instruments. So I may do that. Those are about $30 per instrument, $30 for a bundle. I think it's per, not sure it's per 100. So for $30, if I get an option chain data, I'll definitely go with that because it's the most efficient price. Again,
Market data
gold,
connection lost.
moderate volatility, 18%. Mixed recent
Market
trend,
data connection
downside
re-established.
risk managing, protective, put prudent addition to lock in arbitrage gain with protection. So you can imagine how really good this is. So this file or report, I call it summary, is only for today. This is not going to work tomorrow or next week. This is as of today, based upon the current market conditions. So here's the weighting allocation of $100,000 simulated portfolio. 35K because of the highest profitable potential. 35K for Bitcoin. 25,000 for cotton, and 51%. So you can see here the pattern is the higher the volatility, the higher profit potential you'll get. ES 383. That's not worth it, and that's on a $20,000 allocation. So when you start to look at which is going to give you the higher profit potential, you're looking at them right here. Outside of that, it looks like Bitcoin, if it goes in the right direction, you can do very well with roughly a pretty nice return of about 30%. Whereas these are much lower, higher risk. And the volatility is about half. So you can look through that. So again, these are the allocations. Okay. So 10K for 10% gold, you're only going to expect it to get back $87 per unit, 18%. Protective strategy. Smaller allocation reflect lower profit potential compared to top instruments. That's quite good. Remember, I fed it 46 instruments. So the AI is able to figure out what's the best way to allocate it. Okay. So we're using medium frequency trading. Do not use high frequency trading unless you're a big shop. Okay. So again, it goes through all this risk management, blah, 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 all that. So I've gone through enough of that. So let's run this. Now, again, guess what? The code is going to be available for very, very short time. Maybe a day, maybe 2 days. I don't know. Let's see what happens. All right. So I'm going to quit that. Okay. So if you go in here, this is the one that we run. Now, in terms of generating to make this workable and runnable, I went through 3 different models, LLMs. All of them are pretty subpar. I'm talking OpenAI. I'm talking the Gemini now. Grok is getting up there now, Grok 3. And the one that still works, still number one, is Claude. Claude 3.7. Claude 4 with reasoning will be the best, but very expensive to run, and it still generates a lot of errors. I don't bother with 4 yet. I think it's going to take a while for it to get updated and corrected as time moves on. Okay, so this is a proper one we run. So let's check it out. And so we want 3B Python. Oh, yes, so we got to do that. So this is 100%, 100% Python. I've pretty well kept it minimal. So here's our dashboard for what I just told you. Okay. So I put in $100,000 simulation, total P&L, open. So we have our instruments here, the ones that were top: gold, aluminum, S&P 500, cocoa, and Bitcoin, again, reference rate, which we know about. And these are the allocations that it would choose. Okay. So here we can see our open positions and we have our tracking control. Okay. So I'm going to start the live simulator. Off it goes. And it's going to tell me what it's currently trading. Now, usually you can see here we got a bid and ask, and this is all, again, simulated. Okay. I could probably turn this into a live trading with interactive brokers and feeding that data. I'm not doing that. This is just an empty shell. Okay. Set of code. But what I want to show you here, this is the bid and ask spread for, let's say, Bitcoin. We can pick this off and go with ES. That should update it, and it's just straight down. This gets updated every so often. Gold. Let's see. There it goes. It's updating it on the bid and ask spread. Okay. So that's pretty cool. That's a cumulative profit right here. Now, if I wanted to look at the instruments, there's the potential P&L volatility set for the annual. I believe, I'm not sure. I thought I could put it where you can pick and choose which instrument you want to run. And then we have our positions here. So here we have our supposed close positions. You can see here our realized P&L, exit price, entry price, exit time. So some of these are going to be very fast. All the open positions available, entry price, current price, unrealized entry price. So again, if you want a source code, you know what you're going to do. You're going to go onto my website, quantlabs.net. You're already on my email list. You already hopefully got the email. It's only going to be available till Saturday, or probably tomorrow. I'm going to take this out. Where this code does end up, it does end up in my Premier membership, just so you know. Okay, so there you go. These are live market prices. Again, very basic instrument if you are in dashboard, but it's pretty good because you're going to get the source code with it and be able to work from that 100% in Python. Plotlib, a lot of the libraries are fairly basic. Matplotlib. I've gotten more sophisticated with other frameworks, or I should say packages. You've seen them. But I thought this is a good one to go with. If you want this, you got to jump on this now. And once you see this, jump on it now, because I'm going to take it out and put it into my more pricey membership. But it'll sit there forever and ever. Amen. And this is current. So this data, this analysis may change over the next couple of trading days going into next week. All right. So we'll leave it at that. Thanks for watching. Have a good day.